It's a great question, Jeff. And by the way, the words he used were retiring transitory. When I was a real smug kid, I would go to my parents and tell them that I'm retiring obedience. And I don't think that went well either with them. So this is a mea culpa. There's just no question about it. What Jay Powell's saying is I was wrong. And what that's going to do in terms of A, Fed policy, and then B, the value of assets, we don't think is really understood. As you guys were talking about the 10-year before this, in effect, people are buying the 10-year feeling insulated on the longer end of the curve. But the reality is no asset will benefit from the cost of capital rising. And you can kind of see the same thing going on in certain US equities. Most equities have kind of been punished the last couple of days. And we could talk about the Omicron, but I really think it's people somewhat fearful of the Fed's pivot to being wrong. And you can see people buying quality blue chip businesses, kind of longer duration ideas like the 10-year in Microsoft and Apple. And I think that looks just as foolish as buying the 10-year right now.
Well, it's our job to try and look through some of the near-term challenges, obviously, like Omicron. We're all in a bit of a holding pattern in terms of just how deadly this latest variant is and how transmissible. But Cole, as we look at the Treasury curve, as you've pointed out, that doesn't quite match up, does it, with this renewed focus on inflation from the Federal Reserve? And we had great jobs data from the ADP survey. We had pretty good data around manufacturing and industrial production out of the United States. Why did we see the yield curve flatten further and the short end of the curve drop 6 basis points? That doesn't match up at all with some of the other data we're seeing.
Yeah, and it probably comes down to, Jeff, that people are just looking for somewhere to hide in the interim, not knowing what to do at all. Because, I mean, what we're dealing with Powell, stating that he's wrong, is that we're completely out of the model of what investors expected. They've treated the Fed as though they were an omnipotent ship captain, and as long as the ship captain stewarded the ship, you were going to be fine, which was really nothing more than ultimate liquidity. And now that liquidity is going to be gone. The question is how quickly and how much. And I just don't think people know what that's going to be like. But to your point, Jeff, I mean, the inflationary pressures we're seeing incredible inflationary pressures here in the United States. Just go look at the value of your car. That just never happened in your life. And, if we look at actual real yields, we're going to watch real yields go from the most negative levels we've seen since like 1974 to a meaningful real yield. And that's catastrophic for risk assets.
Cole.